Welcome back to the Open Web Forum at CogX, curated by Fabric Ventures. And boy, do we have a cracker of a final panel for you now. Staying on topic, we're going to keep digging into DeFi, this time considering the applications beyond arbitrage and trading. Our final moderator of the day is Anastasia, co-founder of Akropolis, a wire and finance ecosystem project. They focus on making on-chain yield-generating products accessible to the non-crypto native user. Akro is backed by Spartan Capital, IDEO Collab, and Leisure Prime. Prior to going down the crypto rabbit hole, Anna's finance career spans special situations, hedge fund secondaries, private equity, and credit. She transacted over $3.5 billion in deal value and advised on over $300 million in private equity transactions. Anatoly is a board member of a private equity fund. In over 4 years in the crypto ecosystem, she's been an advisor to Polkadot's Web3 Foundation, a mentor to ETH Global, and is currently an active DeFi investor. Among other things, Nexus Mutual, Terra, Synthetics, Thorchain, 1inch, Nansen, Hashflow, Xerion, and Impossible Finance. As if all of those duties weren't enough, Anna is also a member of the IDEO Founder Collective, DAO, and the DeFi Alliance. Over to you, Anna.
Thanks, Ian. I'm delighted to introduce tonight's panel. We have quite a lineup. Two really prominent, let's say, former TradFi to DeFi plays. We have Dmitry from Copper, Anatoly from Nickel. Hi. Fran from Superfluid Finance, probably one of the more interesting new DeFi primitives on the market. We have Julien from Stake Capital joining us. And I believe we are waiting for Stani to join us from Aave. Cool. Hey, guys. While waiting for Stani, probably, if you would intro yourselves, starting with Dima. And you guys recently closed a pretty impressive round with some fantastic names. I'd love for you to share some color.
I see that, Anatoly and I only got the white shirt memo, so that's fine.
Negotiated.
In a nutshell, I'm a CEO of Copper. We provide sell-side infrastructure to the buy-side players like Nickel in the digital asset space. We essentially provide custody, settlements, and clearing. If those words don't mean too much to the audience, it's in and around safeguarding and trading infrastructure, basically for funds, trading firms, layer one protocols, consumer platforms. We've grown to about 300 plus clients, over 100 people staff, 70% of which are headquartered here in London. And been around for 4 years. So very excited to join this panel. Thank you very much for having me.
Thank you. Anatoly.
Hi, my name is Anatoly Crachilov. I'm co-founder, CEO of Nickel Digital Asset Management. We are a London-based hedge fund dedicated to crypto space, running a number of strategies, starting with market neutral arbitrage, factor funds, and going into more directional exposure to crypto in order to capture the structural expansion of this space. My personal story, I've been in finance for 25 years, for 7 years before Nickel with JP Morgan and Goldman. And around 4 years ago now, my journey to crypto started, which ultimately led to co-founding Nickel. And we have grown perhaps to be one of the leading UK-based hedge funds in crypto.
Fran.
Yeah, hello everyone. I'm Francesco. I'm the co-founder of Superfluid, a new DeFi protocol. And what we set out to do at Superfluid about 1.5 years ago was rethink the way money works. So we've dug quite deep into the smart contracts that define money on Ethereum and changed them at their core, in a sense, so that we have what we call a real-time balance. So balances in Superfluid are fluid, and this enables us to have a native representation of cash flows on chain. And it kind of changes the way balances work, the way settlement works. But at the same time, it brings us cash flows, and cash flows enable a slew of other things that I'm sure we'll discuss later.
Yeah, absolutely. Julien, your turn.
Guys, I'm Julien Bouteloup. So I'm the founder and CEO of Stake Capital. I've been involved in blockchain industry for quite some time, and also I'm pretty big in DeFi space. So Stake Capital, we do liquidity provider, market maker, arbitrage, flash loan. Did the first flash loan in the industry, and also been involved in building a few different advanced strategies in the space. And also doing investment. Yeah.
Thank you. The first thing that I'd love to focus on is really probably the lesser talked about areas of how DeFi improves on existing financial instruments and structures, right? Clearly, the most kind of common narrative out there is it's all about giving the user access or participation and let's say democratizing access. I really would love to move beyond that narrative and hear from you guys, especially from CeFi perspective, from CeFi background. What absolutely radical improvements you see the DeFi brings to the ecosystem and how that really enables your businesses, right? Dim, if you would start.
Yeah, I can take that away. I mean, in terms of the traditional finance, because there was an interesting one, because obviously that's in a non-existence at the moment. But if we kind of go into beautiful, bright future and how this would look like, that's quite fascinating. Because if you think about it that way, right? Or think about like how current system works. So, I'm a fund. I go with a custody or a prime desk somewhere. So I get charged on execution and I get charged on custody fees. Then subsequently, my assets being rehypothecated, which is a fancy word for basically being taken and lent somewhere else. And my prime desk would make basically money on that. And whether there is a market maker on the other side or a hedge fund on the other side who basically would take that in and make money using my funds, regardless, I'm going to see zero interest yielded out of that. And on top of that, to add an insult to an injury, I'm going to pay custody fees and as well being charged for execution. Mm-hmm. So if you think from that standpoint, if we talk about traditional finance and we talk about in a beautiful bright future when all assets are basically tokenized and everything, that me as a fund or me as a consumer, I can participate in liquidity pools, I can participate in lending pools, and I'll be able to essentially generate yield on my assets without actually a middleman taking a cut. So, and again, I mentioned the word beautiful bright future because before we get into this situation, we've got a very massive barrier to overcome, which is not only consist in and around convincing that CSDs or whichever shape or form they're going to take in the future, that there is now an equivalent type of dematerialization of assets, which you might call like de-electronization of assets, that's been taking place. Also, you need to convince the regulators what's going on in DeFi is actually fine, and it's actually a blessing in disguise, and you can track everything that you ever wanted, which you couldn't do through traditional routes. So that's kind of like my 2 cents on how this could be applicable to traditional finance. Obviously, we're super early on. We're probably about a year into the entire DeFi space from the applicability standpoint, because obviously there were talks about it for quite some time, but it has really taken off last year. So it remains to be seen. I know that for sure regulators are scratching their heads as to where have we sinned so much so that we have to deal with this now, and how does one regulate that? But also equally from the protocol standpoint, what we're seeing is an increased communication on the Rex front that, well, cool guys, well, tell us what do you want and how do you want this to happen? That's why we're seeing the rise in projects in and around permission pools, as in UKYC, ML, everybody who participates. So it's quite exciting. It's just going to take time.
what kind of volumes are you seeing in permission liquidity pools? Because obviously, there's been a lot of talk around this, but do you see it's more of a kind of sort of marketing piece at the moment, or is there a lot of
all I'm seeing at the moment
happening?
3 NDAs in front of me about this permission,
Right.
and that's
Fine.
really most of it. So it's very fresh, it's very new, it's very exciting. But you're right. I mean, much similar to CBDC, it's like teenagers talking about sex. Nobody knows how that looks like. So we'll find out.
Absolutely. And I thought, from your perspective, as an institutional investor and a fund manager, right? When we look at, let's say, TradFi money trying to enter or get exposure to DeFi, right? Can you just give us more color around what people, first of all, what drives people? What are they looking for? They can't find in the existing marketplace, right? And how do you fill that need?
Yes, to me, DeFi, it's an inevitable, highly competitive environment for capital efficiency. And if you think there were a number of industries which have been disrupted in the last 10, 20 years, including retail, which was disrupted by Amazon, music industry, you name it. And yet financial industry is the one which is still kind of remains pretty archaic. And disruption is coming. Essentially, what DeFi brings is an algorithmic form of financial services. You have in traditional banking, deposit taking and lending. Well, you can replicate this in a DeFi space by using a protocol, which is going to be far more efficient than having a bunch of bricks and people sitting in between and connecting these two parts of the equation. DeFi will disrupt, of course, the way exchanges are run, right? From centralized into decentralized. You can build decentralized insurance, and everything this comes at the time when the potential of this disruption is incredible. We have a number of investors who are invested in market neutral fashion with us, and that's our core business. Right, but more and more of them are now looking into directional exposure to crypto markets, specifically for the DeFi space. And the equation is extremely simple. If you look on, say, Bitcoin has market cap of roughly $1 trillion, right? If you buy into thesis that Bitcoin is digital gold, then looking at traditional gold, which has market cap of 10 trillion, your growth ratio, your growth factor is roughly 10x. And then you look on DeFi space, and total market value as of today is roughly $60 billion, of which in borrowing and lending protocols, roughly $20 to $30 billion. Now, the question is, what is the addressable market of these borrowing and lending protocols? And when you look on the traditional space, you have bank mortgages, you have bank lending, you have international bond market. Pulling this together, it's $140 trillion. Now, your starting point is 20 billion, potential luring market is 140 trillion. Can you expect to displace completely traditional finance? Perhaps that would be a stretch. I'm willing to settle for 10% of the market. What is 10%? This is a 700x growth from where DeFi market is today. And this is a structural kind of structurally extremely appealing growth pattern. And that's what many institutional investors looking at this space, whilst they recognize it may disrupt their operations, they are looking to capture this expansion. For the time being, we're seeing mostly demand coming from family offices who are able to take this decision quickly and engage. But ultimately, with some delay, we're going to see a large institutional investors coming after this market as well.
Sure, absolutely. Yeah, that really matches the conversation that we'll be having on the institutional side, where you really need to have ideally a single decision maker that can take a direction view and already has conviction. But most institutions are still in the kind of observer mode. Actually, this is what I'd love just to get Julien's input from a stake DAO perspective. What's your take on what part of TradFi is DeFi likely to replace? I'm sure your view is going to be quite different to that of Anatoly. Do you expect DeFi to wipe out TradFi completely, or only certain parts of that?
Yeah, I think that's a good question. I think trying to explain DeFi in the sense of using the same mechanism as we used to do in traditional finance. I mean, my background is also like a quant and trader in traditional finance, and I mean, saying that Bitcoin is potentially like kind of digital gold, and then trying to analyze the market as the potential market cap of gold and all of the like real estate and national debts and all that stuff. This is a good way. This is an interesting way of doing this, but I think all the people that previously tried to predict the market of crypto from a traditional way, they all failed, because otherwise they will have been pretty big right now in the crypto market cap, and they are not. They're just now jumping into it 10 years later. So my point is, I think DeFi is basically rebuilding a new paradigm. We might actually use existing way, like for example, traditional finance, and trying to replicate some piece of the puzzles that were built in traditional finance. But I think the thing that we're currently doing in DeFi is completely new. And there is no, it's nice to analyze how traditional finance was built and also having experience in it. But what we just realizing right now, it's people that are building the future of finance, people that were not involved in finance before. And for example, like the project here, Superfluid, they're reinventing the way as the way we distributing money that was not even done before. So I think it's a new way of thinking. We need to think outside the box. It's a new paradigm,
sure.
And I don't think that. And in stake DAO right now, yeah, I think like all the people that we getting in touch with and also talking to are people that were not necessarily in traditional finance, but have a lot of access to capital. So as you said before, like some family offices or like people that have a lot of money, and they want to have passive income, and they are looking for strategies that the financial institutions were not able to give them before, or maybe the cut was higher. So yeah, I think traditional DeFi is basically disrupting traditional finance, but in multiple different ways, and also with people building on top of it that are not necessarily from traditional finance.
Yeah, absolutely. Yeah, I agree. I think this is
I'm going to present a challenge here, if that's okay, because you know all panels love a challenge, right? So just helping your job, Anastasia here. It's and I'm going to quote Mike Tyson on this: "Everybody's got a plan until they get punched in the face," and that punch in the face comes from the regulators, because it's really like and I see in a lot of folks like there is definitely better ways of doing things. But we are where we are. We ended up with regulations that we ended up with for some particular reason, because everything that's been kind of like proposed right now by non-traditional finance people, oh, let's do it like that. That's been introduced 20 years ago by regulator because of some case. 10 years ago by regulator because of some case. And basically, you know, there are always, you know, there'll be scammers and the different kind of actors that will try to exploit the system in order to gain personal advantages. And from that standpoint, I think the industry is very, very young right now in terms of like seeing the full wrath of a regulator, because I think this is definitely coming. And it's not going to just about DeFi. It's about centralized finance. It's about exchanges that base God knows where and trading again, with God knows whom. I think like the punch is going to be very, very difficult to withstand.
Again, this approach is really it's very about we know and we understand what happened before, like in the 80s, 90s, when traditional finance went into the market and then regulation came in and regulated the entire market. It was true because before, in order to do business, you had to set up a centralized business, a centralized entity, limited company, and then connect into a hedge fund, a bank, or build a Revolut, build PayPal, build all those different companies Well, before, in order to do that, you had to communicate, you had to talk to the regulators, you had to talk to those people. But right now, what we're talking is like someone that has access to a laptop, someone that has access to some skills that can allow him to set up a GitHub account, which is not really complicated, and then immediately deploy the smart contract that can get 250 million, 1 billion, 1.5 billion, 5 billion, 10 billion assets, and then provide on top of it 50% APY, where hedge funds are struggling to do the same. Banks are not able to understand what is going on. So my point is, regulation is important. But will regulation be able to tackle this market? I don't think so. This is like a tsunami. This is like something that people don't understand. And explaining this from a traditional background and saying this will come because someone go into the ring, need to get punched, and then we remember the punch. Yeah, maybe. But right now what's happening, it's completely different. I mean, people, central bank are now talking about distributing digital currencies. I mean, China will come first. Europe will need to catch up. But my point is, what's happening now cannot be explained by some old dinosaurs tools that we used to use before and wanting to tackle some companies. This is happening, and the reason why we're having the chat now is because people from traditional market couldn't understand what was happening. Curve has 10 billion asset under management. I mean, TVL, Have has 25 billion. Those two projects are providing people with 1,000x more value than what you can get from the bank. So this is a complete paradigm, a new way of thinking.
Yeah, I mean, risk return wise adjusted, right? Like it's obviously at the same time you're not like, you know, the common request, by the way, beyond arbitrage and trading from the client that we get for basically the smart contract functionality is that, can I set my fees ridiculously high so in case there is a rug pull in a smart contract, I basically jump in front of them basically to steal my money, right? That's like an institutional request because they've got 100 million deployed. And that's like, we have to have it. We have to have it because otherwise my money are going to disappear, right? So it's all risk return adjusted. Obviously, as this space matures, you know, we're not going to see that, those 1,000x. So I don't think we're comparing apples to. I'm with you 100% on that front. I'm just saying it's also that the regulators.
The disintermediation you can do of smart contracts with traditional finance, though. I mean, the high APYs you see are not only because of high risk, they're also because of lack of intermediaries, lack of rent seeking. And, you know, as Julien was saying, the fact that literally a kid with GitHub can launch a protocol, you know, that is one of the reasons the APYs are higher. And in general, there's a more direct correlation between, you know, interest paid and interest received, right? So I wouldn't completely put it all to regulation and to.
Completely agree. Like
also,
look, I mean, I'm coming.
We've been hearing about you know, Western democracies regulating crypto forever, and the latest news is you know, El Salvador making Bitcoin legal tender. So I mean, I think the tsunami is going pretty strong, as Julien was saying, and maybe we don't have to worry that much.
Yeah,
equally, I don't think that regulation is exactly an unexpected punch, right? Because people have been expecting it and talking about it, and it's been a process. It's not something that is coming kind of left field, right?
We feel it, like we feel it as a UK-based company, right? Like we feel it.
Absolutely.
Like because people come to us and like, okay, well, I want to deploy $1 billion into something, right? And then regulators are aware of that, and they go like, tell us everything that's happening there. And you start unwrapping this, and they go like, okay, Jesus. Okay.
But yeah, but the thing is like compared to previous industrial revolution, those previous revolution could be stopped because someone could just go somewhere as a local location of the company or understanding who was responsible for building like a copycat of PayPal or whatever, and then arrest them and then put them in prison, and that's it. Well, right now, the technology that people have access to and the easiness of those deployments, then you cannot stop them. That's the thing. You cannot stop in this new revolution being able to deploy the contract that can make some strategies or some APY. Most of the time, if people hide, this is very difficult to catch them. They will be able to catch them, but if they use like very advanced tooling, it's impossible. And then coming back to your point about APY, the reason why we have high APYs because maybe like some really shady stuff going on. It's not true. I mean, like look at Curve. Curve, for example, Curve Finance, it's an auto market maker. if you look at the traditional business, I mean, traditional finance, FX, $6 trillion market, 6 trillion volume, US dollar volume per day. Well, this one, what is Curve doing is just mathematics. It's basically swapping USD with Euro, providing the best quote. Yes, an exchange, providing the best quote ever, and then only charging 0.04% fees, where hedge fund or banks or Revolut or like people using like TransferWise, they would charge 1 or 2%, or now even less of the bank. My point is, the team is 5 people. It's not like 1,000 or 2,000 people, and that's 1 billion volume per day, 10 billion TVL. What I'm saying is that Aave is the same. Other projects, Stake Capital or Stake DAO, other projects in the industry. Now we're seeing very small team, 2-3 people deploying trillion, billion market cap projects, which has never happened before, and some of them are also anonymous.
And Julien, I would add that Curve has no operational costs whatsoever.
Yeah, zero operational cost, exactly. Yeah, I mean, the operational cost is by the client paying the fee, and that's it. Yeah.
No, I think the capital efficiency
I mean, like this kind of business never happened before. Where tell me one business we can swap $100 million without almost zero fees and zero impairment loss. Normally in traditional finance, you will need to have like multi-collateral party, sign lawyers, sign with the bank, wait 3 months, 4 months, and then hopefully hope for the deal to go through, and then the people in the between will maybe charge max a 5 or 10% fee on a deal of $100 million. And this deal, you can get it like right now in less than 12 minutes.
I think this is the case for DeFi from the capital efficiency point of view, and it's absolutely correct. It's unstoppable and inevitable. But where Dmitry is right is to what extent institutional investors, who unfortunately are bound by many regulatory layers, how quickly they can engage. And here we should be mindful that regulators cannot stay on the side for too long, specifically that market cap of crypto now over 1.5 trillion, over 2 trillion, right? And with DeFi expanding, that's certainly going to be on the radars. Can this be overcome? I think what Aave has done recently with this institutional pool, which is essentially kind of a segregated, permissioned pool of investors who can trade directly on the pre-cleared basis, that may be a way forward as an intermediary stage. Ultimately, I believe everything should be permissionless, but various players are subject to various restrictions. Retail investors less so, institutional certainly under regulatory scrutiny.
Of course, and there will be trade-offs one day. Because permission tools can't offer.
Sorry, I was saying it's nice for a change to see the institutionals in the cages and the retail running wild, and not the opposite.
Yes,
it's quite interesting that ultimately DeFi opens access to retail in a way that traditional finance was never able to do.
Yep.
I'd love to focus on the use cases that are novel, that haven't been really possible before, and we've already spoken about unique capital efficiency and low-cost basis of DeFi solutions. Fran, talk to us about what you guys are building, how it's different, because obviously the concept of transferable cash flows have been really talked about for a while in DeFi.
Yeah.
At least in our little kind of bubble, right, of like 500 people. And yes, I'd love to just hear more about, let's say, the most realistic and, let's say, most unusual use cases of transferable cash flows.
Yeah, sure. So what we've built at Superfluid are basically on-chain cash flows, right? So cash flows that can be defined in a very simple data structure. And the way we do that is through streaming money. So it's either on or off. And that's the big difference that enables us to, quickly kind of slice and dice and move cash flows in a way that's not as easy, let's say, with cash flows that are a transfer once a month. So that said, the kinds of use cases we see are from more traditional things like cash flow financing, things like rental advances. But we've also seen, for example, tokenized or securitized referral links. So referral links for services that people can then transfer and sell as assets. We've seen, for example, continuous auctions, which are very interesting use case. And we're also working with a project that's working on DCAs, so buying an asset every second. So all of these kind of time-based applications are things that we're very keen to see. But ultimately, what I'm excited about is not just building cash flow financing, but it's seeing how cheap can we make cash flow financing, and by making it cheap and removing barriers to access, can we offer it to micro entrepreneurs, to freelancers, ultimately to individuals on the same basis as we offer it to corporations now, right? And that's ultimately the power of DeFi, reducing barriers to entry and enabling things to happen at a much smaller but still global scale.
How scalable do you see your solution potentially?
Well, basically, when you create a cash flow on Superfluid, it's one transaction on chain, which transfers money forever. So the way we've built Superfluid, it's literally a way to reduce the amount of messages you send to the network. As I said, one transaction, transfer money forever. So it's something that has never really been done before in this way. And I think it's very scalable. Ultimately, blockchains are not scalable. We know that. So we'll always have to keep building and expanding capacity. And I think there's a lot of smart people working on a lot of different solutions. But one approach that hasn't been done before is increasing the density of information in transactions. And that's what we do at Superfluid at the token level. So instead of making a transaction which moves money, we make a transaction that describes the movement of money from now and into the future. And by doing this, we change the way money is transferred, and we change the way settlement works ultimately.
Sure.
So settlement occurs without transactions. So yeah, it's a bit of a different way of building things.
Yeah, what I really love about it is that you're not precluded by high gas costs by design, right? So this is just a radical new way of approaching the problem, which is very cool. Continuing the topic of, let's say, financial primitives that don't exist in traditional finance, flash loans have made quite a dent in the DeFi ecosystem last year. Julien was quite heavily involved in that. I'd love to get your thoughts on, if you just give our audience a quick intro on flash loans and what they enable, because it's obviously an entirely unique crypto-native instrument, right? That's really a weapon of mass destruction. Just talk more about that. And what could be built on top, I think, more than anything else.
Yeah, sure. So to keep it very simple, flash loan. They first appeared last year, beginning of last year, and basically what you can do, you can virtually, not virtual, but imagine you have a pool of liquidity somewhere like 150 million, whatever. What you can do, you can virtually request that amount of liquidity to be yours. So imagine if you, for example, like any developers or anyone in the world, they can have access to $100 million. And the deal is basically the protocol will allow you to use those $100 million as long as you can reimburse them in the same block. So, for example, in Ethereum, if the block is going at the speed of 12 seconds, the deal is the protocol will allow you to use those 10 million or $100 million as long as you give back within the 12 seconds. So basically, the transaction is not actually going it's only within the block. You request the capital, and if you fail to reimburse the flash loan, the liquidity plus little fee, and that's where the cryptonomics comes into play. The reason why people give you access to this amount of money is because they charge a little fee, and this fee can go up to 0.4, 0.2, depends. And before there was 0.4%. It was pretty high fees because there was no competitions on the market. So there was only Aave, and now you have like Yield, you have Uniswap, you have project like DYDX that are providing flash loans for free.
free, yeah.
But yeah, that's basically the deal. And what people have been using it is, think about in people outside DeFi or even DeFi, or people that were damaged by those kind of flash loan in some exploits. They've been saying that flash loan are not good and they are impacting the space, which I think is actually the opposite. Think about the reason why we've been saying those flash loans, those flash loans being used in exploits, for example, is maybe because the market is not mature enough, or the security around those protocols are not safe enough yet. And think about flash loan in traditional finance as a big bank or hedge fund or big institutions that are able to trigger enormous amount of capital in a very short time of a period of time, and deploy it on the market. So, for example, for taking a short, taking a long, or not like legally manipulating the market, but acting and taking position in the market with huge amount of capital. Where in DeFi, now people with access to enormous amount of capital and not actually people with capital. This is like a new paradigm. That's why I think it's trying to explain the potential, and also how big is this tsunami with some this happened in traditional finance, this will follow up this will happen in DeFi. I think this is not a good way of looking at the picture, because what we have access to now in DeFi are completely different and new tools. For example, like just imagine if 40 years ago in 80s and 90s we could have said to someone in the street, listen, I'll give you $100 million for free. You just use it and give me back a percentage when you've made your business, your thing. This never happened. This is actually the situation in DeFi. And flash loan, what they can do, they can be built on top of any protocols with there's a massive opportunity. For example, you could think about, okay, in Auto Market Maker, so Auto Market Maker already disrupt the market of market makers. And so, for example, people providing quotes like taker, maker in centralized exchanges. Now, if you think about Auto Market Makers in DeFi, some days and now more often they are making more volumes than centralized exchanges. So it's already happening. Well, now what you can do with flash loans, you could potentially also counter attack or like the impairment loss. You can, for example, if you're making a quote, you could actually request flash loan to counterbalance the impairment loss of a swap, for example. You can also make lending more efficient. You can basically build, and you have now protocols that are building flash loans natively because it's helping them. So like a small fish swapping $100. Imagine if in order to get $100, the best quote from USDC to USDT, for example, if you're doing the swap, you will take maybe, 0.5% fees. Well, what the flash loan allow you make $10,000 swap, get you $100 inside, and pay almost 0% impairment loss because you're using multiple routes. That's the thing that you can do in DeFi with flash loans, but you can do multiple different things.
Sure, but all of it is really focused on trading, right? So it's ultimately a trading instrument, right? A source of credit for the duration of the block. Right?
It's a credit. It's a trading tool right now because we haven't thought about something else that we can do on top of it. But I'm sure that people will be building. I mean, we have now games that are building flash loans for flying spaceships or driving cars, and I'm sure maybe Superfluid has been looking into using flash loan potentially. I mean, I think anyone in DeFi, not necessarily correlated to traditional finance, to finance, can actually use flash loan for different things. I mean, for example, you could for example, real estate or car industry, as soon as you have some NFTs. So now we're starting to use, I'm starting to use flash loan in NFT market. Why? Because the NFT market is not very liquid. And what you can do if you use flash loan, you can actually do, what I would like to see, for example, in the near future is using flash loan cross. Yeah.
Interesting.
Yeah, you can.
Yeah,
so I build, we're building some NFT cross swap using those kind of flash loan. But the thing is what I would like to do is using flash loan cross chain. And
Sure. Yeah, that's a very interesting topic.
It's very similar to tri-party repurchase agreements and cross-margining. So when you mentioned like there's nothing to do with traditional finance, it's like copy-paste of what basically this gentleman over there was selling to his clients as soon as they enter into position on the private banking world, right?
I don't have access to that though, right? I do get access to Flashstone.
Oh, no, absolutely. Sure. And you know, when we talk about tri-party repos, do you really want generally, I mean, obviously, you know, I got no doubts about you guys, etc. But like when we talk about like general population and, you know, TikTokers and whatnot, do they need to understand what tri-party repurchase agreement is and how does that work and whether they actually benefit? And, you know, on one side, you're saying like anybody with 5 people can deploy a smart contract. On the same hand, you're saying, well, this system is not developed enough and it's leaking left, right, and center. I mean, if we put those two things together, I think that we're very early on in evolution to basically say, yeah, it's all done and dusted, and it's a tsunami that nobody can stop. People, it's going to be carnage of retail investors. Like, you know, like Anatoly is not going to get hurt, and other players like him are not going to get hurt. But retail investors are going to suffer big slap in the face before that actually just, you know, settles down a little bit, guys. Because I mean, I'm 100% with you on automated market making. Perfect solution, you know the way the blending and borrowing works, phenomenal. But I just want to be a little bit more realistic in terms of where we are in this journey.
But that is still kind of very important democratization of this process, because if you think automated market maker up until now, that was a game reserved for the large institutional players.
Yeah,
right? You don't mess around with market making unless you can write a check of a couple $1 billion. Today, pretty much kind of everyone can engage in this decentralized exchange game, right? Even if you have $100 only. So this is certainly a democratization. Will be some casualties? Well, perhaps, as any new technology, the adoption curve will not be a straight line.
We're making more volume than centralized exchanges right now, and this is all on smart contract, you know. And so, I mean, basically, what you're saying is like. I mean, saying that this is not, I mean, like, we still need to regulate and build very quick and then build institutions around it because it's kind of still very unsafe or whatever. This is basically betting against mathematics. There's no other way you can just define this to counter-attack my point. If you don't believe in mathematics, then this is exactly what you would say.
Oh, yeah, I don't think it's betting against the mathematics in any shape or form. I mean, I think every single institution would love to do what's happening in DeFi space. Absolutely would love. It's just they can't because there's a professional investor qualification to sell certain products, and you can't go around it. Yeah, and at the same time, as much as anybody can deploy, as much as anybody can deploy, like on GitHub, something, right? Like, you know, do you still have a face to a name? And regulators are going after this face to the name, right?
But maybe it might change. It might change. You know, that was the same.
Oh, maybe, 100%.
That was the same people were saying that the taxi economy or the taxi economy will never be disrupted because it was the biggest mafia in the world, like insurance. I mean, taxi, there was Uber, and then the hotel industry, the same, then Airbnb, and then the financial industry, normal one, then Revolut. All those guys are taking account of the financial, traditional finance. Well, here what we're talking about is even bigger. And if the banking system are saying, oh, you need to put a name on a piece of paper for me to get involved in that, well, maybe they will lose.
But Julien, you can't missell a hotel or you can't missell a taxi, but you can missell a financial product.
Guys, we have to wrap up at this point, even though this is why it's getting really interesting.
For me, so there's a difference.
We'll build some safe havens. We'll build some walled gardens for all your institutional.
No, look, guys, I just wanted to make a lovely discussion instead of like, you know, kind of, you know, sitting here and agreeing with each other and everything, right? 100%. I'm very excited about the future. I'm with you on that front.
But it seems like we're not really seeing too many use cases that are outside of trading, right? It's still really
building them. We're building them.
This is a very dynamic part.
It's not true. Like, look, survey. One big company now, like 4 billion, no token, just purely equity, NFT market. 4 billion, the biggest VC in the world trying to get in. This is like not finance. This is just football. Football, you know. You have the same happening.
That's a disaster waiting to happen.
I really wish
thanks for the insights.
I really wish we had another 6 hours just to quickly finish this conversation off, but unfortunately,
4 yards for a database
schedule. I mean, how could I possibly follow that? I think I'll just underscore a call to action that Julien
Thanks,
made.
guys. Sorry to steer.
That's all right. I've been loving it. Julien said this is happening.
Thanks for the info, guys.
And the reason we're having
Thank
this
you,
chat
guys.
now is people from traditional markets are realizing it's happening. And I think that just really sort of summarizes all our feelings. So thank you again, Anna, Dima, Anatoly, Julien, and Fran. Brilliant conversation. We'll continue on Discord, I think.
Cheers.
Yeah, thanks all. Take care. Bye-bye.
Well then, what a day it's been. From discovering a new paradigm of the open economy with Richard to dissecting the usage of data in healthcare, open web innovations in sustainability, the data economy, crypto investing, and finally 2 brilliant panels in DeFi. It's really been my pleasure to guide you all through these panels today. Tomorrow we'll start at 10 a.m. sharp BST, where we continue our deep dive into decentralized finance, more specifically this time, what the market opportunity might be. That's definitely one not to miss, so we'll see you then. Cheers, everyone.